The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. The Trader's Edge. Now, Steve Rhodes.
Good morning, folks. Welcome to the January 11th, the terrific Thursday edition of today's Trader's Edge show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. The easiest way to do that is to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Now, today, you and I, we're going to go check on the circumstance of these markets. We'll go figure out what those bulls and bears, what those buyers and sellers are communicating to you and I at just past 11 o'clock in the morning. I want you to know I'm absolutely grateful for your presence here, but even more important than that, and that's this, during this next 53 minutes, I'm here to serve you. So feel free to pick up that phone. We'd love to hear from you at 877-927-6648. And if you can't call in, but you've got a question, you can always send me an email. For that, you send that to steve@tfnn.com. And inside the subject heading, if you'd be kind enough to put radio show question. Of course, inside our Tigers Den, well, any and every ping will do. So let's go ahead and get this show started on terrific Thursday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to the show. Right now, we got a mixed bag out there in the U.S. indices. You got the Dow up 95 points. The S&P's up 4. The Nasdaq's down 50. The Russell's up 8. Semis are up 2. Trannies are down 49. You've got gold trading up $14 at $18.92 and change. Silver 35 cents at $23.83. Light sweet crude is up $1.30. 78.70 is the print there. Natural gas up 26 cents. That's a 7% move to the upside. 30-year Treasury printed out at 129.15. That is up 12 ticks. Lead the charge. Dollar-wise, the upside, you got that Mercado Libre up $31, a little over 3%. Service now $9, 2.5%. LPL Financial Holdings up $6.50. That's 3%. Pioneer Natural Resources, $6 to the upside, nearly 3%. Hess Corporation up $6.40. That's about a 4.5% move. To the downside, the shakers out there, BlackRock, it's down $12, a little over 1.5%. Logitech down $11, 17%. That's a stinker. Illumina's off 5.5% or $11. O'Reilly Automotive down a little over 1%, $9.29 to be exact. Regeneron is down $9.02. That's off about 1.25%. So we've got some movers and we've got some shakers. Of course, I want to look at what you want to look at. We do have one question about ExxonMobil. We'll get to that momentarily. That is from Hector and Patty. But first, let's go take a look at the equity future contract out here. So let's do this. We're on the black screen. Let's just stay here for a moment. Equity futures. So if we take a look at these, what we can see here is that my e-signal charts, these are the black background charts. You've got the ES Mini that closed above and is trading above the top of its daily profile. That's a bullish signal. That suggests a move up to the 0.618 retracement level of 40.35. The case of the NQ, the same thing. Yesterday closing above, today trading above. 11.280.55 is the key number there. A close above that suggests a run up to its 0.618 retracement level at 11.732. If we take a look at the Dow has been above, now this is day number 3, above the top of its profile. It's traded above yesterday's high. That's a bullish signal. The ES and the NQ are not trading above yesterday's high just at the moment, but the Dow is. It's already at the 0.618 retracement area. So if it doesn't turn down from here, expect and anticipate a move up to that 34,684 area. That's a 0.786 retracement. And lastly, let's take a look at the Russell 2000, which yesterday had a nice big move, closed above the top of its profile, which is at 1853. You're trading above that today. You're trading above yesterday's high, just like the Dow is. The Russell is in a bullish configuration as we speak right now. So today, just look for a close above 1748.29 to confirm that move. If we take a look at the New York Stock Exchange right now, this thing has gotten into the extreme overbought condition. You can see the reading here is 265. Whenever you get above plus 150, you move into the oversold status. It can stay oversold for a while. We could see price move higher with the advanced decline oscillator moving lower, setting up a divergence pattern. Some of those are identified here with those black diagonals where we have the advanced decline oscillator falling with price rising. I can't use that for a timing tool, but it does tell you what to prepare for. Expect at least that oversold or overbought condition to get worked off. And then lastly, let's just look at that spot volatility index, which is well below its 50-day exponential moving average. Again, the 50-day is kind of a line of demarcation that tells you whether bulls or bears have the wind at their sails, and right now it is the bulls. If price were to close above 22.71, that's the 50-day exponential moving average. Well, then that would be a bearish signal for the ES Mini. Now let's go take a look at those multi-panel ES Mini charts out here. So we'll move over to those. The largest time frame we have here is the daily. That's in your upper left-hand panel. Now in the daily time frame, you'll see that this has a different set of profiles than the black background charts. Oftentimes that'll happen. It's using the same data for the most part, and its calculation shows resistance at 40.67. So that's the top of its profile. You may recall when we take a look at the ES Mini, we said the next move would be 40.35. So 40.35 to 40.67 would be the range to the upside, and if you close above yesterday's high, that more likely is a outcome. That's the daily chart. Right now, it's basically off just a tad, couple of points. 5-hour time frame chart has a TD9 count top. It formed that on the bar following bar number 9. That was at 9 o'clock this morning. So it closed above that high, which is at 40.1975. The pattern gets negated. Would tell you about a strong upward momentum move with its price target. This is on the 5-hour basis at 40.86. Now, we got that TD9 count top, and price pulled back and tested two levels of support. One was the green oscillator and change line, so you're above profile and the green oscillator and change line. That says our overall conditions are neutral at the moment. And then also the top of its profile, that's at 39.58. That was tested. That was rejected. So it's not as if the push lower, even though you got this TD, it already pushed lower. And so far those areas have held. But it's neutral. It's neutral until it gets back into its profile below 39.57, or again, above the highs of the day, 40.1975. That's the 5-hour chart. But look at a 4-hour chart. 4-hour chart. We have a TD9 count top as well. If we look at the 2-hour chart, Rhodes momentum indicator top, and wave number 7, that's the letter G that you see on my screen out here. So you've got the Rhodes momentum indicator top, price pulls back, finds support at the center of its bearish structured profile. Well, price has been above the top of that bearish structured profile. Typically, price will find support on a counter trend move, and right now that's what we have to call this, a counter trend move, because it did find support at that 39.67 level. Nonetheless, it still needs to close above the high of the day to suggest that it is in its bullish mode. The 60-minute time frame chart not helping us. The 30-minute Rhodes momentum indicator top, wave number 7, price gets back towards its breakout level of 39.4975. Nothing broken there. The 15-minute chart has a TD9 count top. So we've got several topping patterns. Even the 10-minute chart has a top. But again, a close above today's high so far. And that's at that, let me see here, that's at the 39.9175 level. That's what you need to see in order for the ES Mini to keep on its, it won't change to bearish if it doesn't close above that. It will just simply give you a signal as to how bullish it is if it does close above that high. Steve Rhodes with TFNN. We get back from this break. We're going to go to Hector and Patty, who've got a question about ExxonMobil and A to B equals CD patterns. Steve Rhodes with TFNN. We'll be right back.
Currencies, commodities, and bond markets are as important as ever right now with how they're driving the volatility in equity markets across the globe, which is why it's a great time to try out Teddy Kegstad's Tiger Forex Report. Teddy Kegstad breaks down the Forex markets every Monday using his 30-plus years of experience as a trading veteran of futures, Forex, stocks, and options. Teddy releases his weekly Tiger Forex Report every Monday morning with coverage of all the major currency pairs, including the dollar index, the euro dollar, pound dollar, dollar Swiss, dollar yen, as well as many more, and he also has weekly coverage of the crude oil market and the 30-year T-bonds, as they both influence Forex markets tremendously. When you sign up for the Tiger Forex Report, you also gain instant access to Teddy's 60-minute webinar archive he just hosted, Forex Strategies and Fundamentals, What is Behind the Tiger Forex Report. For all the details and to start your 30-day Tiger Forex Report subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors. Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So our first question, it's actually the only question that we have at the moment, is from Hector and Patty. And Hector and Patty say happy Thirsty Thursday to us. Well, back at you, my friend. ExxonMobil, A to B equals CD pattern. So what Hector wants to do, I've drawn that in during the break here, he wants to use as a B point, which is correct, or an A point, I should say, the low from, as we take a look at the data that we've got on my chart right here. I'll pull this back in a moment. So he wants to use the low from December 7th. That's at a price point of 102.37. He'd like to use the high out here from the trading day of January the 6th. That's up at 111.99 as the B point. And then the retracement would be the low that forms after that. And that takes place on the following candle. And that's the low from January the 9th out there. This question is CD leg bars, way to the left, green bars with volume, gaps, etc. equals high probability ExxonMobil headed for the 1.618%. So he's looking at A to B equals CD. So that's one A to B equals CD. What you need to see today is price close above, or you'd like to see price close above that 111.99, Hector, with more than 16 million shares. So in the first 2 hours of trading, we've done about 5.6 million shares. If we multiply that times 3, we get really close to that 16 million, even above that. I don't know that we'll use straight line math. We'll work its way out at the end of the day, but it's got potential to confirm closing above a swing point with volume out there. And that gives you a 1-to-1 price projection of 117.43. Hector and Patty, the levels that you really want to be watching and observant of is the 114.66. 114.66 is the high of the year. The high of the year. We're going to switch over and take a look at my white background charts here. Trading above, closing above the high of a prior year is a bullish signal. And so ExxonMobil may be giving that to us, could give it to us today. You're trading at 113.47. So regardless of the A to B equals CD patterns out there, and I know that you are long, Hector and Patty, stay with that trade. You'd love to see price close above 114.66. Now, we take a look at the white background set of charts out here. When ExxonMobil was making that high, that all-time high back on November the 8th out here, it was a TD9 count top that it formed. It had a Rhodes Momentum Indicator signal that was also confirmed out there. So that's where price is headed to, that high, that resistance level. So closing above that, again, that's at 114.66, would negate that signal, and that would be a strong pattern. And Hector, then you probably would look at this large A to B equals CD all the way down to September 26th low as your A point, your B point being the high that we just took a look at, your retracement into the lows from December 7th, which is what we use right now as an A point of a smaller A to B equals CD. And see, Hector, there's a number of A to B equals CD patterns within inside of this ExxonMobil chart out there. What I will share with you is we are in wave number 7. Wave number 7, that's coming off of your low out there that we were using at that 102.37 mark. And so if we do get a lower high tomorrow, that would identify a topping signal as we come up towards the resistance area. So just be careful there. That might just suggest a retracement back to support, which could be in the 110.13, 112.07-ish type area out there. If we look at the, oh, I didn't mean to do that. Did I really do that? Stevie. Did I delete the daily chart? Let me try to get this back. Oh, my goodness. Son of a gun, I did. Okay, sorry about that, folks. That was, oh, there we go. Okay, got it back. Okay, so, yeah, so we got that resistance low. But, again, closing above that 114.66, Hector and Patty, that's going to be a really positive and bullish signal and message. Of course, on the monthly time frame, ExxonMobil negated its TD9 count top. Even though it has a Rhodes Momentum Indicator topping signal, there's no bearish reversal candle, so no problems there. And on a weekly basis, price right now trading above its green oscillator and change line. That's at printing out at 112.86 or so, and staying above that is a bullish signal. So Hector and Patty, I hope that helps answer your question. Yes, that's a valid A to B equals CD pattern that you drew in there with a price target area of 117.43. But you know your real battleground is at 114.66. So again, thanks for writing in. Have a terrific Thursday, and we will look forward to speaking with you again soon. Dennis G writes in, hey, Steve from West Palm Beach. Hello there, Mr. West Palm Beach. What's Microsoft doing for the next 2 weeks? That's a pretty funny question out there, but let's go see what it's doing right now and then try to give you an idea of what its next move might be. So we're going to go take a look at MSFT. My apology, I still don't have this system fixed yet. As soon as we get off this show, I'm expecting another support call and probably another several hours to try to figure out what the Sam heck is going on with this software application. But that's okay. We're getting beyond it. You just have to just delayed a little bit. So your question was Microsoft. What is it doing for the next 2 weeks? So the very first thing is what we can share with you is Microsoft on a daily time frame is above the top of a bearish structured profile. This will be day number 2. It's above its oscillator and change line. So that just simply suggests that price should move higher. Its price target is going to be the swing point, which is already trading into from January 2nd. Now that swing point had volume of 25 million shares. As we speak right now, what Microsoft has done is 10 million shares. So it's certainly moving into that swing point with volume. If it closes above 237.40, odds favor a move up to 245.75. If we look at the weekly time frame chart out here, price is consolidating with inside its weekly profile, but it's above the center of that bullish structure profile. This would signal it's above its oscillator and change line, Dennis. This would signal move up to the 248.12 level. On a monthly time frame, Microsoft has a confirmed TD9 count bottom, but your resistance area here right now is the bottom of its profile, 251.16. So your question is, what is Microsoft likely to do for the next couple of weeks? The first thing it's likely to do, I can't tell you what the time period is at least go tackle the high from January 3rd up at 245.75. That's supported by the weekly chart that says 248.12, and then your big issue is going to be, perhaps that big issue may be that 251.16 area. If I look at a 30-minute time frame chart here for Microsoft, if we do the play-by-play with George Kell, we can see that a TD9 count top is likely to form as we come into the 11:30 time frame and complete that pattern at noon. So you may be getting, or Microsoft may be getting ready for a pullback or retracement. That pullback or retracement would target 236 and change, and then 234.29. So I hope that helps you out with regard to Microsoft and what its next intention is doing. How long that takes, no idea. Once it gets to those levels, then what's its next move going to be? Well, we'll probably go take a look at volume. We'll take a look at any other patterns that might be out there. So, Dennis, I hope that helps you out with regard to Palm Beach. With regard to Microsoft, and nice to have a neighbor send in a request, so to speak. So what do you want to take a look at next? Let's check the email. There's an email here from Janice. Janice says, "Hi, Steve. A longtime listener, never wrote to you, but was listening to Tom O'Brien, your segment with Tom O'Brien on Monday. Would you be kind enough to review those slides?" So the answer is yes, but I've got to get that fired up here. So give me a moment to do that. That's where, right here. Okay, I've got that now. All right, so that's open. Let me start this slide. More requests, just Steve. I see. Okay, got one from a guppy. Okay, so we'll go to that. So let me get this set up here during the break. I'll review the slides that I shared with Tom on Monday. Those of you that didn't hear it, well, then you're about to hear something new and certainly worthwhile to listen to. And then we'll also take a look at K-Web from a guppy inside the Tiger's Den. My apology for overlooking that. We'll be right back.
If you want to take advantage of this sector, now is the time to subscribe to my Gold Report. The Gold Report is a comprehensive look at the metals sector as well as the markets that move gold, which is the currency and bond markets. New subscribers get a 30-day money-back guarantee, so you have nothing to lose. Every Monday morning, I publish the Gold Report with coverage of gold, silver, bonds, the XAU, HUI, GDX, as well as more than 30 different mining equities. To see for yourself the types of profitable trades that are recommended within the Gold Report, sign up now by visiting TFNN.com. Don't miss out on the next great gold trade. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV, live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
welcome back, folks. So for Janice, we're going to go take a look at the at a presentation that I did during the segment that I do with Tom on Monday afternoon, and this is the first chart here that we showed. Now, this chart here is provided to us by the folks over at SeasonX, which do a tremendous job of being able to allow you to take a look at the seasonal type patterns, and it applies to individual stocks. Right now, we're just taking a look at the indices out there, so I really recommend the tool. Now, what I've done here is I've identified, this is for the Dow that we're taking a look at, I've identified the third year of a presidential cycle. And this takes us back to 1899, so that's how far back we go. So there's plenty of data out here. And the red vertical line that you see out there, that was Monday. So that's where the market was on Monday. And even though we're trading a bit higher here, it's really showing a sideways action, sort of what the market has been in for the most part, and then a move higher. But the most important thing, what I wanted to share with you here, and I shared this with Tom, it was a very pertinent question that he asked, which was if price is going to follow this third-year presidential seasonal cycle, the low for the year should already be in. The low for January should already be in out there. So we want to keep an eye on that. Now, this suggests basically a market that continues to move higher up until about the middle of August, late August out there, and then the market moves lower. So this is the third-year presidential cycle. Seems to make sense to me out here. But this is what the Dow's third year of a presidential cycle looks like. If we take a look at this chart out here, this is the Dow's average seasonal pattern over the last 126 years. This is the chart that most of you are familiar with. If you're longtime listeners, I used to provide a version of this chart. Mine only went back to 1896. Well, this goes back to mine was a little bit more. This goes back to 1897. I see. But in any event out here, which basically shows the following, which is that you make your most significant bottom typically around the end of January, then you make another one in the middle of October, and a high in late August, early September. And that's the average seasonal cycle pattern out here for the Dow. If we take a look at this next chart out here, this is the average price movement for years ending in 3. So again, I'm back to the Dow chart. So the first year is 1903. We're in a year ending in 3. So just curious, what does that look like? That says that we should form a top pretty much near today or so, and then move lower into February. So that says take out the January lows, and then that's it. So once the years ending in 3 make their low, their bottom in the early to mid February timeframe, then it is off to the races to the upside for the rest of the year. So, you want to pay attention to that. If we break out the lows, then you can say, like, Stevie, that just violated the chart you showed me earlier, which was the third-year presidential cycle out here. And so then we can say, okay, so maybe that chart's not the one that is in charge here. Maybe it is the years ending in 3. I don't know, but just something for you and I to keep our eyes on. Then the next area that Tom and I discussed was, everybody, not everybody, but most people, when I take a look at a financial news network, whether it's TV, audio, whether it's no matter what it is, people arguing about whether we're in a recession, going to head into recession. What does all that mean? So let's get rid of that. Let's get to something that's very easy, which is something called stagflation. And so what we do know is back in the 70s, that's the largest period of time where stagflation was recorded. And stagflation is occurring when inflation is outpacing GDP, which it is doing at the moment. So here, if we just take a look at other time periods where we can see that, I just went back to the consecutive time periods. There are other time periods where we see a year or two of this situation. But here's a prolonged period, which is basically 1973 to 1983. And all this data, it came from, it might have been the Bank of International Settlements, or it might have been the Fed's website as well. So it's coming from government data, so to speak. Now, if we take a look at those years, well, cool thing is that we can take those years then, come back to the SeasonX chart, identify those exact same years, and see what their pattern is. And if we take a look at their pattern here, a bit choppy, but it really does show that we, in essence, form a low at the beginning of the year. We move higher into the mid-May time period, and then we get the real sell in May cycle out here. So at this stage here, we've got price that appears to be breaking out above profile levels. We'll know a little bit more at day's end, but this is certainly a seasonal cycle pattern that we should be aware of because we basically are in. Steve, stagflation chart, why increase in years going to the left? Mr. Bill, could you restate that question for me? You mean over here where I'm showing 1984? Why are my dates this way? Just because of the spreadsheet that I had, I suppose. Just because of the spreadsheet. That's all. Yeah, it's just taking the data that I had out there, usually you'll see 1972 on the left and 1984 on the right. Really, all I was trying to do here in preparing for Tom's segment was to just kind of give you a visual of what's transpired out there. So let's just get rid of I'm getting rid of at least the recessionary questions out here. That way we don't have to, so now that we've got that data, again, that provides us with this chart here, which is a real helpful chart for us to understand, or at least I do. So that whole, do I need to go through any of the rest of this stuff? Let me see here. I might as well. Now we've got 3 minutes. So missing from all that stuff that you and I looked at, because we hear a lot of doom and gloom type stuff out there. Maybe it's doom and gloom for the economy, but what you and I are doing during this show here is we're really not discussing the economy. We're discussing what buyers or sellers are doing with with all the charts that we look at for their different time frames. That's what we're doing out here. And we take a look at the charts historically. The whole the doom and gloom thing doesn't seem to be working out, at least with regard to a presidential cycle of a third year, the seasonal cycle, the years ending in 3, and average price movement during stagflation out here. Of course, once we move higher, or should we move higher into May, we certainly want to pay attention to that. Now, these are a few of the weekly charts for the Dow. Here is, on the left, is the actual cash indice. The one on the right is the equity future contract. Well, you should notice that each of them have formed Rhodes Momentum Indicator bottom patterns. They have both been confirmed. Okay, Stevie. So what does that mean? Well, it turns back, when I went back and I did the historical analysis of the Dow when it makes these weekly patterns and what significance is it to us, if any, we'll take a look at these 3 patterns that are out here, or at least the first 2 that we can take a look at. And on a weekly basis, hard to generate a Rhodes Momentum Indicator signal. But that's what confirmed the bottom in March of 2009. There were a number of patterns out there, but this is certainly one of them. And then we get back into the 2015, 2016 timeframe. A hammer candle confirms a Rhodes Momentum Indicator signal. And now we've got our next one that just confirmed. So I think to ignore this pattern out here would be foolish, even though it may go against our normal thinking of what we hear everybody talking about. But shoot, we don't really care what everybody talks about, right? When it comes to this show, we just care about the facts. We just care about the facts and the patterns, and we get rid of all of that minutia that is out there. Here, if we take a look at so if we want to go back before 2009, well, then the next Rhodes Momentum Indicator bottom that formed was back in 2002. And you can't argue that didn't identify a very significant bottom. So those Rhodes Momentum Indicator signals, folks, if you're new to that, or you've heard me talk about it, but you've never really understood the pattern, go understand the pattern, because this works on all the time frames that are out there. And you can do that by subscribing to Mastering Probabilities just for less than 30 days out there. So, Janice, I hope that helps you out with regard to the explanation of those charts. I think they're really important, and we'll continue to track those and see how the year plays out. So now let me see. Well, we do have some other questions that did come in inside the Tiger's Den. I had overlooked those. So one was for K-Web, and I believe that was for McGuppy out there. Want to take a look at K-Web. He says, it looks like, to me, like it wants to fill the gap from last week and retest the previous high, which is also around the 21-day moving average, around $32. Do you see a similar target using your tools? Would 32 be a good entry point? Well, we can say one thing. Support out here, McGuppy, this is a new support level from a profile, is at 33.17. Steve Rhodes with TFNN. We'll be right back.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
The technology around us is changing every day. With so much happening, it can seem impossible to keep up with all the information. David White's investment newsletter, The Technology Insider, is designed to give you all the information you need to understand the technology that shapes today's markets and tomorrow's future. David White has made his living staying on the cutting edge of technology. His weekly newsletter will give you specific recommendations for value tech stocks, as well as entry prices, target prices, and stops to set for each trade. Dave delivers his weekly newsletters every Friday with updates throughout the week. You can get the Technology Insider at TFNN.com for only $37.50. Sign up for David's newsletter, The Technology Insider, and get an inside look at everything the technology sector has to offer. Try it risk-free today with our 30-day money-back guarantee. TFNN, educating investors.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
Welcome back, folks. So let's go take a look at Crane Shares, CSI China Internet ETF, KWEB. And this is, excuse me, this is for one of our Denners, McGuppy out here. And his question is, he believes that the price is going to fill the gap. That means get down at least to the high of the trading session from January 3rd. That high is at 32.24. His question is, do we see anything to suggest that price will pull back that far? And what we do have is a new profile that developed. The bottom of that profile is where the buyers reside. That doesn't mean that buyers are going to be able to fend off sellers out there, but you can take a look at volumes. For example, on that gap to the upside, on January the 4th out there was 37 million shares. So far today, we've done 7.9 million shares. So it is pulling back on light volume into that. So 33.17, if you're looking to enter a long position, that would be a price area that I would look at. You could have an order in there. You could have an order in at that 32.25-ish, even though 32.24 is the top of that. So that would be one possibility. Your real question was, do I see it getting down there? The new profile should make you and I pause just a tad. What would suggest that price could get down there is the weekly time frame chart. And so McGuppy, on a weekly basis, a TD9 count top is going to complete on Friday. And that typically results in price moving back to support. Now, ordinarily, I would say back to the oscillator and change line, but price is above that level. And above that level would be 31.98. And so 31.98 would be a target if price gets, and that gets you to your 32. 31.98. I mean, it gets you right to your two. So the daily charts just say, hey, you've got this battle at 33.17. If price closes below that because of the weekly TD9 count top, that 31.98 really becomes a target. Now, it could be gunning for the oscillator and change line, which would be down at about 27.52. That price obviously will change as time goes on. What did I do? I deleted that chart. Oh, my goodness gracious. I had a 30-minute chart open. What the heck happened to it? What the heck happened to it? There we go. Okay. It's on a different screen. Let me move this over here for you. And as we take a look at the 30-minute chart for KWEB, no real signal out here. Rhodes Momentum Indicator top. Yeah, that was at 10 o'clock back on January the 9th a couple of days ago. It's just been moving sideways and gap down this morning. Trading into a prior swing point. So there's a swing point out here that had 2.4 million. Again, we're looking at a 30-minute chart. Another swing point out here had volume of 3 million shares. This one on the gap to the downside was 3 million shares as well. So you would have liked to have seen a gap down with lighter volume if it was going to signal that this might be the bottom out here. So I'd wait. It's got that possibility. You know the parameters right now. You know where the buyers are lined up, and that's basically 33.17. So, McGuppy, thanks. Sorry for overlooking your question initially, and thanks so much for that request. Dan inside the Tiger's Den wanted to take a look at PLNT. So we're going to do that. PLNT is, sounds like plant to me. It is Planet Fitness. So as we take a look at Planet Fitness, Dan, there's a possibility that today Planet Fitness will confirm a daily Rhodes Momentum Indicator top. We'll do that if it generates a bearish reversal candle. Right now it shows up as a bearish engulfing. No idea what it looks like at 4 p.m. Let's assume this is 4 p.m. All right, Stevie, interpret the chart here. Well, you've got a Rhodes Momentum Indicator top, price above the top of its daily profile and above its green oscillator and change line. Therefore, signals are neutral. Doesn't mean you can't short it. It just means signals are neutral. They're not the best parameters for shorting. You've got support at 82.22 and then 79.61. On a weekly time frame, things look pretty good. Price is above a swing point. Bar number 7 out here. That could be the B point of an A to B equals CD to the upside, Dan. It was Dan who asked. That was 3.6 million shares. This week so far, this has done, 3.3 million shares. So now you've got a confirmed weekly A to B equals CD to the upside, a daily signal that is on a neutral pattern, and a weekly, on a monthly, that says you're trading into the sell zone. It's a bearish structured profile, Dan. So the sell zone, fairly wide. It's between 82, 84, and $90.09 out there. Your question was to review Plant. Let me take a look at the 30-minute chart out here, see if there's any kind of signal information. Yeah, Rhodes Momentum Indicator top, price below profiles. So price could be gunning for 81.38. But boy, the weekly chart looks very, very good. The daily, again, neutral. The monthly chart, nothing wrong with the monthly chart other than it's running right into the sell zone out there. So I hope that helps you out. Don't know where you're at in that position. Not that I need to know because I'm just providing you. You're short from yesterday's high. Okay. So, you've got to watch that 82.22 level. Price gets below that, then watch 79.61. You're going against that weekly strength out there. You're going against that weekly strength. And but the 30-minute chart from a short-term standpoint says stay with that position. But if price does get down, if it does get down to 81.38 and test rejects that level, that's probably the extent of the short trade out there. So I hope that helps you out. Thank you very much for the request. 30-minute chart not showing for KWEB. Sorry about that. Let me see if I can go back there. I'm not sure if that was a 30-minute chart that you were asking about, but let me make sure I'm in the right spot. Oh, I was not. Oh, geez. I did that review. Oh, man, Stevie. I didn't have the right charts up, period. The right screen up. So let me go back here. Geez, I'm sorry about that. So here's KWeb. There's your 33.17, the bottom of its profile, your TD9 count on the weekly. Again, price would likely target 31.98 out there. And again, KWeb trading the monthly resistance, 36.43 being that level. Here on the 30-minute time frame chart for KWEB, you can see the Rhodes Momentum Indicator top. And then those are the 3 swing points. Today's swing point to the gap to the downside, as well as the one from January the 6th, and then another instance on January the 5th out there. Let me turn back on the charts for Planet Fitness out here. PLNT is the ticker symbol, so you'll be able to see what it is that I was looking at. Here you can see price above the top of its green oscillator and change line and top of its profile. Again, potential confirmation of a Rhodes Momentum Indicator top if you get a bearish reversal candle at day's end. But again, it's neutral because price is above significant resistance levels out here. Here's the weekly chart. Here's your swing point, which is bar number 7 to the C point of the Chapman wave. Weekly counts out there, and price is again, that swing point at 3.6 million shares. You already have 3.37 million shares, so it looks like you've got a confirmed A to B equals C to the upside on the weekly basis. And again, here Plant trading with inside the sell zone of its bearish structured daily profile. And then finally on the 30-minute chart out there, my apology for having to repeat this, but I was in the wrong spot at the right time. Just the wrong spot. If we take a look at the 30-minute chart for Planet Fitness, Rhodes momentum indicator top, price below profiles right now, so it could be gunning for that breakout level of 81.38. So sorry to have to repeat that twice, but glad that we were able to get that in. Thank you, Mr. Bill, for letting me know that Stevie was a little bit messed up. Let's see here. Just looking to see if there's any other requests. I don't think so. Yeah, I don't think so. So I think we're good there on the request. But boy, if there's something in there that somebody requested, because we do have a couple of requests that have come by email. Brent writes in. He said, "Good morning. Could you please do your analysis on Silvergate Corp? SI is the ticker symbol." So yeah, let's get that fired up here. We're about to go to a break. But let's see if we can. Well, I've got to reload all the historical data on these charts. Let's just see if what type of time frame it gives me to get that done here. We've got 20 seconds. Tell you what, Brent. We're going to take a look at this when we get back from this breakout here. Ticker symbol, again, is SI. We're not taking a look at silver. We're looking at Silvergate Capital Corp. For Brent in Martinez, California.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
You might think that if you want to be successful at trading in the stock market, you're going to need a crystal ball. After all, it's impossible to predict the future, right? Like any endeavor in life, before you decide it's impossible, get some advice from the experts. You might find that it's not so impossible after all. For daily market overviews that give you direction on the key indices, selective stocks, and commodities, subscribe to the Opening Call newsletter at TFNN.com. The Opening Call newsletter is written by Basil Chapman, creator of the trading methodology known as the Chapman Wave. The Chapman Wave up-down sequence gives you an edge in identifying price turns, finding the peaks and valleys in stock prices. Get the Opening Call newsletter by Basil Chapman in your inbox every day. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know, and you'll get a full refund within 30 days of signing up. TFNN.com, educating investors.
Everything in the universe is governed by the Fibonacci sequence. This mathematical principle is responsible for everything from the most aesthetically pleasing artwork to patterns in the stock market. To stay on top of stock patterns you can take advantage of, sign up for the Fibonacci 24/7 newsletter at TFNN.com. When you subscribe, you'll get a weekly report from veteran day trader Larry Pesavento on stocks you need to pay attention to. And you can trust Larry's analysis. After all, he's got 45 years experience as a day trader. Larry will also provide daily charts, videos, and data on the key markets that he's tracking. Expect notifications from Larry on market movement you need to act on at any time. First-time subscribers also get a 30-day money-back guarantee. If you're not satisfied, let us know and you'll get a full refund within 30 days of signing up. Subscribe to the Fibonacci 24/7 newsletter today. TFNN.com, educating investors.
TFNN has launched the Tiger's Den, hosted at Discord. TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Welcome back, folks. So we're taking a look at the stock chart here for your ticker symbol SI. That is Silvergate Capital Corp. And Brent's specific question is, do my charts show any pattern that could justify taking a long position here? And the answer is yes. On the trading day of January 10th, what formed was a bullish engulfing candle, and that bullish engulfing candle confirmed a Rhodes momentum indicator bottom. Now, There's a new profile that's in play here. And all price, when you make a bottom, all it suggests is price is going to go test resistance. So resistance out here, Brent, is 14.19. And be careful about this stock. I suppose this thing had a nice move on the trading day of January the 4th. On January 4th, what it did was volume of 13 million shares. And then, bang, the very next day, twice the volume, 30 million shares as this thing gapped down, took out prior lows out here. And so the reason I say be careful is because when looking at the weekly time frame chart, this thing negated a TD9 count bottom. It tested and rejected its red oscillator and change line, and it did that last week. Now, that's a real resistance level of 17.14. So potential resistance at 14.19, and if price could close above that, then you're looking at that red oscillator and change line. No bottom pattern here on the monthly time frame. In fact, in the month of December, price negated a TD9 count bottom. So what price might be doing, Brent, is getting back to its all-time low. Its all-time low from back in March of 2020. That's at a price point of 760. Now, folks, this is an instrument that back in November of 2021 traded to a high of 239. And right now it's printing out at 1275. And Stevie is suggesting that there's a possibility this thing wants to at least get back to its all-time low, and that's down at 760 out there. But Brent's specific question is there any kind of pattern that suggests taking a long position? And Brent, the answer is yes. We take a look at that daily time frame chart. Hope that helps you out. Real quickly here, UEC, that is for LB and LB. You've got price above the top of its daily profile, green oscillator and change line, no topping signal in place. This looks like it wants to move higher. Move higher to where? I'd go with 459. Well, 418 is going to be your first area. The monthly oscillator and change line above that, we're looking at 459 to 462. But so far, so good when we take a look at UEC. Folks, thanks so much for joining me here on Terrific Thursday. Please have one of those yourselves. And join me tomorrow morning, 8 o'clock sharp. Oh, really, I think it's like 8:08 as we host the Trader's Edge show then between 8 and 9. Have a terrific Thursday, folks. We'll see you in the morning.